Hi traders, this is Max from learnthepriceaction.com. Today I'd like to share with you a method you can use to trade the pin bars on 4-hour chart. The way to do the pin bar on the 4-hour chart is using two exponential moving averages. One is your EMA 34 and the second is your EMA 89. Okay, I won't be trading just solely of these EMAs, but I will look for opportunities when a pin bar forms on these two EMAs. Why I chose 34 and 89? There are two reasons. Number one, they are Fibonacci numbers. Okay, and secondly, Forex is highly dependent on Fibonacci numbers. So anytime the market comes, moves forward or comes back, it really respects very well the Fibonacci levels. So, and the third thing and the most important thing is that the EMA 34 represents 8 EMA of the daily chart. And the 89 EMA on the 4-hour chart represents 21 EMA on the daily chart. Okay, why is this important? The reason why I want to use this is because when 8 and 21 EMA are crossed, or they're diverging, or they have moved significantly in one direction on the daily chart, that gives me an indication that market is moving in that direction. So I would want to go back to the 4-hour chart and drill down, which is 4-hour chart, and then look for opportunities like pin bar or inside bars on 34 and 89 EMA when the market retraces, and look for opportunities to go long. So let's see an example how we can do this thing. I'm just gonna move this area here. Okay, so I'm now in the GBP/JPY 4-hour chart, and I want to show you how these three EMAs are drawn here. This blue EMA is 89 EMA. This red is your 34 EMA. And the blue dotted line you see here is actually 21 EMA, but that 21 EMA is again for the 4-hour chart. Okay, that's just a mean of the 4-hour. I don't solely go off that. I only take trades from the mean of the EMA when the market is very, very fast and it's moving in that direction. So market, I can take the trade on the EMA as well, on this 21 EMA as well. But most of the time, I generally don't even plot it. Okay, so notice this crossover that happened right here. Now that crossover of 34 and 89 represents that the daily 8 and 21 EMA has crossed up. Okay, so when they have crossed up, that means that I want to go long. I want to go long on 4-hour chart. And how do I go long on the 4-hour chart? Is by looking for price when it goes up and it does a pullback. Okay, so notice here the price moved up, EMA crossed up, and the price came down, and this is that bullish pin bar that formed on 34 EMA. And also it formed on a horizontal level. So there is two level of confluence that's happening. One is 34 EMA, second is your horizontal level. So how do you enter this trade? Very simple. You take the high, you take the low, put an entry at the 50%, put your stop loss below that. That's your risk. And then you can put your 3 or 4 times the reward right here. So you would have made your 3 times the reward in this time frame, which is about 1 day. Notice again the market came up and then came down right here. Okay, And then what happened again? Again is a bullish pin bar that formed right here. Okay, would I have taken this trade? Yes, because you can see a large tail on the bottom, and this is another good example right here, and I would have taken this trade. How would I have entered this trade? I would have entered this trade again 50%, put the stop loss below it, and I want to trade it up to top of this range, which is right here. I would have exited the trade right here. So you would have made your 3 or 4 times the profit right here. So notice how this EMA crossover has helped me get 2 trades right here. Now there was this pin bar look-alike that formed right here. Now why I did not take this trade? Because first of all, when the market is moving up and down, as you can see, the market is moving up and down considerably. Okay, so that means the market respects horizontal level. So if you draw the horizontal level right here, the horizontal level is actually this area, and your horizontal level is this area right here. So the market is going up, respecting, going up. Over here, it is not holding above, first of all, this area, and it's not even holding above this area. And also notice this has a long upper tail, so it's not a good quality pin bar, and it is not even touching the 34 EMA. So I'm gonna have given a miss on this trade. So, but notice this one, how it punches through, and how this one punches through 34 EMA, and how this one punches through 89 EMA. So these were very good pin bars, and you could have taken this. And notice how that long tails on the bottom as well. So let's move on and see some more trades we could have taken here. I'm just going to remove these. Just going to zoom in here to make it easy. Now notice there is an EMA crossover that happened right here. This EMA crossover happened on the daily chart. The market was kind of moving up and down, and there was a big bearish candle right here. So that suggested that, okay, this EMA crossover could be taken because there's a good bearish sell-off that happened right here. So what we can do is we can actually draw a channel, because right now you can see the market is kind of going in a channel. So I'm just going to draw that for you. Okay, so in this sample of data right here, because the EMA has crossed down, so what we can look for opportunities is to go short, right? So there was this good opportunity. This was an inside bar. Inside bar is a different techniques altogether. We can talk about that later. But in this sample of data, like, this was a good bearish pin bar. Notice this happened at a couple of spots. First, it touched the 89 EMA, and secondly, it touched the top of the channel, and also, if you look carefully, there was this breach of this tight consolidation range that happened there. So the market's kind of retesting that level, even though it broke below it, retested, it went up, retested, gap down, retested, retested. Very good pin bar. This is exactly what happened. Market, you put your entry at 50%. Now in this case, I would not have put my stop loss here. I would have put my stop loss here, because notice how these two levels are so close by. So if you put your stop loss here, you could have rode the market for 2 times the reward, or even 3 times the reward right here. So you got your 3R right here. Okay, so again, the market came up here, and then actually formed an inside bar consolidation, and then the market pushed up and then came down. That's a false break, or it's called a Hikake pattern. It's a very powerful pattern. So the way to trade this is simply you take again the 50% of this bar where it broke these inside bars, came up and pushed down. So you take the 50% off it, put your stop loss on top, and then you can ride your market for 2 times the reward or 3 times the reward, or whatever the case might be in this range. So that's how you trade pin bars in line. Now I'm just going to move forward here. Let's see how the other opportunities we can trade. Yes, there's another good crossover that happened right here. So we would be interested in going long, but we will see what all the other opportunities we have. So we have one good strong rejection here, but is this a pin bar? No. Second, another good looking pin bar. It has a long tail. Yes, it's a good looking pin bar, but would I have taken it? No, because this is an inside bar inside of this large candle. So the market pushed down. Again, a pin bar look alike. That's a bullish pin bar. Would I have taken it? I would not have taken it again, because this is an inside bar again. So there is a different strategies to use when you have an inside bar. A pin bar that forms within a large bar is not a good trade to take. Okay, so over here the market pushed down. Notice over here this bullish pin bar that happened on 89 EMA. Is this an inside bar? No. Is this a pin bar? Yes. Is this happening on a horizontal level, which is in this range right here? Yes. So voila, we have all the checklist confirmed. What we can do is we can, because this is a small, it's not as large, you can put your entry at 38.2% retracement, put your stop loss below it, and you could have rode the market back into this zone as you take profit. Okay, even though the market pushed higher here, but if I was trading this, I would have exited the market right here. So you made your 3 times the reward in this area only. Okay, so this is how you trade the pin bars. Let's look at a couple of other examples too. Right here, so the market pushed up and came down here, but notice this pin bar that happened here. So this was a deception. Okay, would I have taken this? Yes, I would have taken this, but I right after I would have taken this, as you can see, market formed an inside bar. Right after this pin bar, market formed an inside bar. Whenever you have a pin bar, okay, and then the market forms an inside bar after that, that means the high and the low is within the pin bar. That is very risky, because what could potentially happen after this is that market could push down and then shimmy back up, or market could go up and push down. So any one of the possibilities is there. Okay, so when you have, like I said, so when you have this situation, I generally want to exit my trade for a loss. It's fine. I can take a loss here because I try to enter here, the closing price is here, but stop loss is here. Maybe I'll lose 50% of my risk, but I'm fine with it. Okay, because I don't want the market to shimmy down and push back up, or go up and push down. In both the cases, my stop loss would have been hit, and I would have been out of the trade. And this is very risky when you have situations like this. Okay, so would I have taken this? Yes. Now let's move further up. Okay, you have this another beautiful looking pin bar. Would I have taken it? Yes. Is it on an 89 EMA? Yes. So notice how I would have put my entry at 50%, stop loss here, and I could have gained 2 times the reward in this area. Now, many times traders ask that, you know what, how can you decide whether you want to take it 2 times the reward or 3 times the reward? Now, this comes with experience. So as you can see, if I would have taken this trade As you can see, this pin bar was failed, which I planned to take earlier. So that means this area is significant, right? So that means bulls tried, but the bears won here. So that means market could push down in this area again and then return from here. So that would have been my ideal location for take profit. Okay, and then in any case, over here, if I would have taken my entry here, how would I have decided that where I want to exit? There are a couple of spots you can decide from. One is your gap. This is the gap right here. Okay, so that will be your first potential target for my take profit. Second is that you have this doji. Okay, then this is like a pin bar, but it's a doji. So this area would have been my exit spot. Even though the market pushed higher, it's fine. Bulls had a lot of power, but it's absolutely fine. So I put my entry here, take my take profit here, and I'm out of the trade. So that's how you decide where you want to exit the trade. In this case, I would have been content by using this price because this is where the bulls tried and the bears pushed them and crushed them. So that means this is a significant event area, right? Over here again, you can see the market is kind of consolidating and moving on the sideways, even though this looks like an event area where market is struggling to push higher. Anyway, so I hope you guys like my analysis, guys. This is what I teach. This is what I write about. Go and check me out at learnthepriceaction.com. I have free resources for people who are interested in learning trading. I do my weekly reviews. I do my Forex analysis and also the commodities and metals. If you like, you can subscribe to my website. You'll get the free strategies and reviews. I don't have any paid content on my website as of yet, but in future I would be launching something. But in the meantime, you can enjoy the articles and videos I post, and subscribe to my YouTube channel if you like it. Thank you for watching. Have a great day.